Good morning to all the webcast of the GST and Indirect Taxes Committee of ICAI. We have the proud privilege of having our Honorable President, CA Atul Kumarji Gupta, as the chief guest for this webcast today. We also have here with us the guest of honor, CA Nihar Niranjanji Jambusaria, the Honorable Vice President of ICAI. We also have the three esteemed panelists of today's program, CA K. Suresh, President and CEO of the India Cements Capital Services, CA Suresh Dasarathi of Soundarya Decorators, and CA Sandeep Bataraji, who is CFO of Crompton Greaves Consumer Electricals. We also have the honor of having here with us the Vice Chairman of the GST and Indirect Taxes Committee, the immediate past Chairman of the GST and Indirect Taxes Committee, respectable CA Sushil Kumarji Goyal, who hails from Kolkata. We also have here the contributors of the Institute's publication, which will be today released by the golden hands of our Honorable Visionary and Tech-Savvy President, CA Atul Kumarji Gupta. I take pleasure in welcoming each and every one of you on behalf of the committee, and I take special pleasure and pride in welcoming CA Atul Kumarji Gupta, who is the President of the ICAI, as all of you are aware, and spearheading the Institute's tech initiatives and keeping us all engaged, keeping us all locked down in this lockdown due to Corona. In fact, such is the intensity of the programs that members find it difficult to attend more than one. They want to attend more than one program. So some of them are keeping two, one as a laptop and one as a mobile, and viewing both the programs, and as and when muting and unmuting their audio to listen to esteemed speakers. In this lockdown period, the Honorable President has spearheaded the tech initiatives of ICAI. And almost the entire world, international, he has brought in to our homes. Such is the dynamism of our Honorable President. Sir, it is a great honor that you are here with us today, and I salute you for your initiatives and for your guidance to the GST and Indirect Taxes Committee. You yourself, being a big expert on GST, being a big expert in the area of consumption taxes, a walking encyclopedia in this particular field, adds value to our committee, sir. And honorable members, we have here today with us the Honorable Vice President of ICAI, CA Nihar Niranjan Jambusaria ji. He has a mixed background of practice as well as industry. Before taking over as the Vice President of ICAI, he was handling the Direct Taxes Division of the Reliance Industries Limited. Again, a walking encyclopedia in the area of direct taxes and indirect taxes. It is a boon that two tax experts are today spearheading the ICAI, leading the ICAI, and leading the frontier, leading from the front, I would say. Sir, welcome to each and every one of you. And I would immediately now go to the Honorable President of ICAI to bless us, to give us his words of wisdom, and also to launch the 11 publications of ICAI, which has been penned by various chartered accountants in the lockdown period. I am very specific. In the lockdown period, 11 publications of the GST and Indirect Taxes Committee have been penned by various chartered accountants who are there before you on the screen. Friends, it is a great honor for our committee that our President is there with us to share his words of wisdom and also release the 11 publications for the cause of the profession and for all the stakeholders. Over to you, Honorable President, sir. Thank you.
Thank you, Rajinder ji. Honorable Vice President ICAI, Nihar Jambusaria ji. Chairman and Vice Chairman of the GST and Indirect Taxes Committee, Rajinder Kumar ji, Sushil ji. Our three distinguished guests and the panelists for the day, Suresh ji and Sandeep Bataraji and other colleagues, and all the distinguished contributor resource person for the various publications being prepared by the ICAI. And good morning, all the viewers. At the outset, I welcome all of you in this special webcast being organized by the GST and Indirect Taxes Committee and the hard work put in to release the 11 publications that practical handbooks on a small matters related to the GST, whether it is in relation to the registration or filing of return or other procedure related to the GST. Friends, you are aware that GST was introduced on the 1st of July 2017 while subsuming more than 17 different laws of the state and the center level, and except the custom duty, practically all the major law, whether it is related to the center level or the state level, got subsumed. And it was a welcome move from the government of India. Yes, we are aware that because of some procedural hiccups and some technical hiccups today, our professional colleagues and the industry used to face some of the challenges. But I can only say that the way that the ministry responding to each and every aspect which is being raised by the ICAI or the other professional colleagues and immediately taking action to resolve that particular issue is really remarkable and commendable on the part of the ministry and the entire CBIC and various state governments. Friends, I'm aware that there are a lot of challenges which are being faced by the professional colleagues in this particular pandemic situation, and I pray the Almighty for for the well-being of each one of you, along with you remain healthy and remain safe along with your family members and colleagues. And at the same time, you have to do a lot of challenges in relation to the running of our offices and doing all these compliances which are required in spite of the lockdown situation is there. So I used to tell my all colleagues and all my brothers and sisters of the profession that you are actually the financial army of the country who is not taking only the interest of the common man being watched, but also you are also setting the international benchmarks so that the Indian economy is growing and our companies are getting listed. They are all complying with the various rules and regulations of the country. Friends, as you are aware that there will be a full of knowledge session today when Rajinder Kumar, under the able leadership of Rajinder ji and Sushil ji, our panelists, will be discussing and sharing the various aspects of the GST. I will not touch because I committed myself that for the 2 years I will not be speaking on the GST matters, which though I used to address we were discussing more than 100 times in a year, but I committed myself for the profession that 24/7 let us work on the various reform of the profession rather than on a subject specific. But I can tell you that a lot of research is required. Still, a lot of research is required in the GST. Even today, you will agree with me. When we are printing all these publications, they are all talking about that what is rather than why is. So we have to see that each one of you who want to master the GST subject or this particular subject, you have to understand or you have to question everything that why is, so that you can go into the jurisprudence of the subject that why this is there, because this law is a very at the nascent stage 2017 and it's a 3-year-old baby only. And we have the certain countries, say for example in the France, it was applicable way back in 1954, and then we have the more than 164 countries where the GST is applicable in one or the other name. That is being called VAT in some of the jurisdiction. It is being called GST in some of the jurisdiction, HST in some of the jurisdiction. So what we have to do that we have to go back and do a lot of research in the jurisprudence of the various activities, various clause or the various nomenclature being used in the GST. Just to share with you, when we are talking about that in case we are rendering the services to an employee, so or we are giving the gift to an employee or we are giving some samples to an employee. So what is the jurisprudence available? What is the exactly the intention of the law behind this introduction of this particular clause? Then we need to have a study. We should have a overall glimpse of at the global level that when somebody at the other jurisdiction use the same term, and then there are the various number of cases are being decided there that become a law of the land in that particular jurisdiction. That's something you need to borrow. You have to customize as per the Indian jurisdiction, and then you have to prepare some kind of a literature. So what I'm trying to convey you, being the ICAI is always being remain on the forefront of the research activity. Research is the hallmark of excellence, and ICAI is always known for that kind of excellence
in the research activity. So we have to come ahead. We have to rise on this particular occasion and to work rather than only on the what is to why is. So something that is very, very important, and that will give a different kind of image, the respect to the profession, because you will be providing a lot of support to the lawmaker on various aspects related to the GST. Friends, I am just wish to share with you that under the able guidance of Rajinder Kumar ji and Sushil ji, we are working hard to open the facilitation center, or you can say the help desk center across the globe, across India. We have already identified 85 branches who will be spearheading to develop this kind of a help center, which will support the MSME, the SMEs, and the other rural entrepreneurship, to provide them the guidance on a pro bono basis, that our colleagues will be sitting over there maybe once in a week for a few hours, and anybody can come over there and take the guidance from the our members who are the expert of that particular subject. And even we are requesting, we are approaching to the ministry, even we are approaching to the CBIC, that one of the officials from the CBIC should also accompany in that particular help desk, so that there the views of the department as well as the view of the professionals are simultaneously made available to the queries, so that that will give a lot of, I will say, the relief to the various aspects, that okay, somebody is struggling with some kind of a interpretational issue or some kind of a query, that how to follow this or what is the procedure to follow this. So that will be, I believe, will settle down gradually, and even I will request Rajinder Kumar ji and Sushil ji that based on the questions being received in these help desk or at the other occasion, we need to develop some kind of FAQ while giving that this is the opinion of the ICAI or one of the author, rather than the opinion of we are saying that it is the law of the land, but that kind of things should be there. Friends, last but not the least, I just wish to share with you, we have recently launched a digital learning hub. That is something unique, I will say, the opportunities or the facilities being provided by the ICAI, wherein not only the other subject, but also for the GST, you have a lot of material being uploaded. The e-books are there are the video lecture. Say for example, you are struggling with the valuation rule 28. You are not aware but like what is exactly the rule is talking about. Then there is a PPT, there is a not only a PPT but also a lecture is available. A speech of the faculty is available for 15 minutes to share you what is this exactly rule 28 is, so that it will give you the clarity. And then we are trying to develop the MCQs, the case studies, in such a way that along with that valuation rule and the lecture, you will be having the MCQs and the case studies to resolve the fundamentals related to the valuation rule of the GST, say for an example. And I am happy to intimate you that the accessing the digital learning hub is without any cost, without any charge to all the members. It's 100% free of charge, number one. Number two, that even not only the unstructured CPR, but also by giving certain answer to certain questions, you can even have the structured CPRs as well from that digital learning hub, and that is something available without any charge to our members. So it is I will say, the initiative taken by the ICAI to support our members, to support our firms, that at least in this COVID pandemic situation, they should not be incurring any expenditure on a year-to-year basis. I can tell you that the ICAI is receiving more than 55 crore of rupees from the members on the various CPE activities which we are organizing. And practically, you will try to understand that we are forego the entire revenue practically just to offer all these facilities made available to you free of charge on this technology platform, so that our members can, at least we can support you. We can support your endeavors. We can support you in this pandemic situation and take the benefit of the technology being deployed by the ICAI. So I convey my sincere thanks to Rajinder ji and Sushil ji for working day and night in this pandemic lockdown situation. All the resource person, faculty members who are contributing, and all the panelists who spare their valuable time to address our members in spite of being Sunday. And though these days on a lighter side, every day is a Sunday. So normally we were used to say that when you are not able to hit a ball, so you were used to say that every day is not a Sunday. So you will not be able to win on every ball. But now what is happening, that we can say that situation is like that every day is a Sunday. So unfortunately we have, but still I'm aware that Batraji and other colleagues are they are taking care of their organizations in spite of the lockdown situation, and even they are visiting, practically attending all the offices. So in spite of their busy schedule, they spare their valuable time. So thanks to all the panelists for their contribution to the this particular cause. With this, I sign off and request Rajinder Kumarji to please take care or take this further for the other panelist discussion in this particular workshop.
Thank you, Honorable President, sir. Now, may I request the Secretary of the GST and Indirect Taxes Committee to give the link to the President that he will now launch all the 11 publications. Tarat sir, can you please play the PPT, and our Honorable President will be pleased to speak a kind word about this publication. Honorable President, sir, for your launch.
Yes, sir. So friends, these are the 11 publications being developed by the various resource persons to support the cause of the profession, to support all the members. And these publications will be available, the soft copy will be available of all these publications, including the hard copy through the central dispatch system. The members can order online for these publications along with the soft copy available. Over to Sharad for so one is the advance ruling under GST, supported by Navya Malhotra ji. Then we have an annual return under GST, supported by Abdul Samad ji. We have a casual taxable person under GST, supported by Yash. E-way bill by J. Murli and Ganesh Prabhu ji. We have an interest, late fees and penalties under GST by Rajesh Saluja ji. We have a Ashu Dalmia supporting the booklet on the invoicing under GST. We have the Shankar Narayanan for the job work under GST. I just wish to share with you that they are the resource person who supported the ICAI in developing all these publications. So the committee contribution to this PPT. And with last few, that is reverse charge by Pramod Dayal Brunta ji. He was our former chairman of the EIRC. Abhishek Agarwal ji is about refund under GST. And finally, the registration under GST by again the Sheikh Abdul Samad ji and by Viral Kandar ji. TDS provision under GST by Rajesh Gupta ji from Chandigarh.
Thank you, Honorable President, sir. Thank you very much for releasing this publication for the cause of the profession. Books are actually garden, books are orchard, books are storehouse, books are a company. It is very popularly said that after dog, if there is second being a man's best friend, it is nothing less than a book. Thank you very much, sir. Now, may I request CA Sushil Kumarji Goyal, our Honorable Vice Chairman, my guide and my mentor in the GST and Indirect Taxes Committee, to please speak few words of wisdom and also invite our Honorable Vice President for his blessings and felicitations. Over to you, our Honorable Vice Chairman, sir.
Thank you, Chairman. First of all, I want to thank President sir for releasing these 11 publications. These publications are very handy in nature, and whenever a member want to refer a particular subject, he can directly go to this small books and he will find his answer. So this will definitely loved by all the members. I believe so. Thank you, Chairman, for taking this initiative. I welcome Nihar Jambusaria, our Vice President, to this webcast and this release of 11 publications program. Vice President, sir, I'm straightway requesting you to please say a few words. Vice President, sir, Nihar, sir. Vice President, sir. I think some.
There is a network problem. It's showing the very poor signal at the Vice President's place.
Yes, sir. It is almost nil.
In the meantime, Honorable Vice Chairman, sir, why don't you please introduce all the three faculties to the panelists today to us as the Vice President joins.
Okay, Chairman, sir. First and foremost, we have with us Mr. K. Suresh. Just a minute. Mr. K. Suresh is an associate member of Institute of Chartered Accountants of India, as well as Institute of Company Secretaries of India, and fellow member of Insurance Institute of India. More than 30 years of experience in finance, security market, accounts, internal audit and marketing, mostly served in financial sector. For a short period served in the media sectors also. He served as a Assistant Divisional Manager, United India Insurance. He served as a Vice President, Apple Credit Corporation Limited, Financial Controller and Company Secretary, India Cements Capital Limited, Senior General Manager, the New India Express, President and CEO of India Cement Capital Limited, Director India Cement Investment Services Limited. He also served as Honorary Secretary of Madras Management Association and member of Management Council of Hindustan Chamber of Commerce. He also served as a Vice President in Hindustan Chamber of Commerce, Past President and Director of Association of National Exchange Member of India, that is NME, most probably known as, regularly appearing on the Sun News TV channel live in their live program on security market related program, member of Management Council of Madras Chamber of Commerce and Industries, ex-member of Secondary Market Advisory Committee. With these words, I welcome Mr. K. Suresh to this webcast which we have organized on GST, and hope all our participants will be benefited through his presentations. Next speaker we have Mr. Suresh Dasrathi. Mr. Suresh Dasrathi is an article. He's worked as an article during his articleship period with Ford, Rhodes, Parks and Company, Chennai, and qualified in November 1976 exams. He was doing his industrial training with the Pinney Limited and taken his first job in corporate sector as a regional accountant with Asia Automobiles Limited, the marketing arms of the Gabriel Group of companies. Subsequently, he moved to Brook Bond India Limited as corporate accountant and as a probably known as Brook Bond, and which was finally merged into Hindustan Lever, now Unilever. He took charge as a finance manager of Bangalore Leasing Limited when the leasing industries was just developing in the country. The entrepreneurial bug bit him, and along with few friends who were management graduate from IIM Ahmedabad, promoted few ventures, including one in the training and development verticals with Swedish collaboration and an export-oriented manufacturing company in leather goods vertical. In late 2010, he sold the export unit and returned to the corporate sector when he took up the position of Vice President Finance with the Sondria Decorators Limited, Chennai, operating primarily in the field of interior fit-out, contracting associated with large corporate and IT and hospitality sector. So a mix of corporate and entrepreneurial experience. We have Mr. Suresh D with us. Hope all the viewer will like his presentation. And in line, we have third speaker, Mr. Suresh Batra. Mr. Batra is a chartered accountant and a company secretary by qualification. Mr. Sandeep joined ICAI straight after qualifying as a TA in 1988, and he worked almost 21 years with ICAI. It always after IC it slipped down to ICAI. It is ICAI, and various business and corporate roles, including running a few businesses of ICAI. In 2009, he moved to Panelist Industries as CFO with responsibility for finance, legal, secretarial functions for all group companies in India and overseas. In September 2015, he joined Crompton Greaves Consumer Electricals Limited as their CFO. An alumni of South Point School, Calcutta, and St. Xavier's College in Calcutta. He has deep roots in Calcutta, the city of joy, and we welcome Sandeep Batraji to this webcast. I think Vice President Sir are now available to all of us. Now over to Vice President Sir for his remarks on this inaugural release of 11 publications which the GST and Indirect Tax Committee done today, and this webcast as an inaugural remark. Over to Vice President Sir.
Thank you, Sushilji. And my apology, I was disconnected in between, and technology and network sometimes cause difficulties too. Honorable President of the Institute, I think he has left, so in his absentia, the Chairman and Vice Chairman of this committee, Rajendraji and Sushilji, the three faculties or panelists of today's conclave, Sureshji, Sandeepji and K. Sureshji, 11 authors of the publications, members of the committee and viewers. In fact, it gives me great pleasure today to know that amidst all adversities prevailing in the country, I am told that these 11 publications were written in last 2 months. When this email came, I called up the chairman and asked him that if you are publishing 11 publications, it may be the work of about 6 months or a year. And to my surprise, he informed that no, all these 11 publications are written in last 2 months. The entire country is locked down. I think COVID is not successful in locking us down, particularly the Indirect Tax Committee, which worked even at home and published all these 11 publications, which were so necessary. In the country in last 5 months, starting from January up to May, look at the adversities that were prevailing. It was expected COVID will enter our country, and finally it entered in January. There were 3 earthquakes in Delhi. There was cyclone in east and northeast. There was flood in Assam. There are disturbances on China border. There was wildfire in Haryana. I understand different authors are in different parts of the country, but none of the authors said I am affected by any of these adversities and wrote these 11 publications which are available to members today. Let me compliment GST and Indirect Tax Committee for handholding the taxpayers right from 2017 when GST was introduced. primarily, normally, it is the responsibility of government to handhold the public when a new law is introduced. But government relied on the institute, more especially the GST and Indirect Tax Committee, and this committee extended its shoulder to the government and said, you rest in peace, we'll look after the taxpayers and we'll shoulder the responsibility of seeing that there are good compliances or 100% compliances of the law. And that is what this committee has ensured over the period. I have attended some of the programs during last 2 months during this lockdown, and this conclave which has been organized particularly from industry perspective, and all three panelists and senior speakers from industry are there to discuss what is industry perspective. And after all, for any tax practitioner, it is industry and business perspective which is important and which drives us when we represent to the government, when we implement the law, when we execute the law. So today's conclave, I am sure, will add a lot of value to the viewers, and we will all be able to serve industry in the right perspective. So let me once again compliment and congratulate the chairman and vice chairman of this committee for coming out with 11 publications. Let me congratulate all 11 authors of these publications who did hard work and wrote these publications in the limited time. Thank you so
Honorable
much
Vice
for giving me this
President,
opportunity.
Honorable Vice President, just a small correction. There are 2 publications which are co-authored also. So there are actually 14 authors, sir.
Okay. Let me congratulate all 14 authors. I did not go through the entire list. My apology for that. But all 14 authors of the publications deserve congratulations and compliments. Thank you so much for giving me the opportunity for sharing my views. Thank you.
Thank you, Honorable Vice President, sir, for those words of wisdom. In fact, you have motivated us to a larger extent. And looking at your working, looking at the way you have handled industry, practice, and now the reins of the institute in your hands, certainly you are an inspiration for the generations to come. And let me reassure you on my personal behalf and also on behalf of my guide, C.A. Sushil Kumarji Goyal, the Vice Chairman, that GST and Indirect Taxes Committee will leave no stone unturned to ensure that the hand-holding of the members, the hand-holding of all the stakeholders takes place. Sir, we in the committee are walking one more mile ahead to ensure that in this lockdown period, our members are fed with knowledge, all the doubts, all the clarifications, the webcasts. In fact, our committee was one of the most earliest committees to organize a big webcast on April 2nd, 2000, IDTC ICAI tomorrow morning, and it will be available for the download of all the members. And as and when the lockdown is lifted, the printing industry starts, the courier and postage, everything commences. We will print these publications and it will be available for the hard copies will be available for the members. Thank you, President. And now, thank you, President and Vice President. And I request our Honorable Vice Chairman to propose a short vote of thanks in honor of the President and Vice President, after which we will start this session. Thank you very much.
Thank you, Chairman, sir. Thank you, President, sir, for being here, taking your time on this Sunday morning. Members will definitely get benefited out of this deliberation. The informed number of initiatives of ICAI which are being taken up in this COVID time also. Thank you, Vice President, sir, for sparing your time on Sunday morning. I understand you regularly attending office at Institute ICAI Mumbai. Today you are attending this program on Sunday. We have not left you even on Sunday. Somehow we catched you. And thank you very much for motivational words you have spoken about all our authors regarding the publication and initiative taken by the GST and Indirect Tax Committee. It will work as a great motivation, not only for this committee, for all the authors. On their behalf, I am thanking you. Thank you very much, Vice President, for being here. Now over to Chairman for conducting this today's webcast.
Thank you, Honorable Vice Chairman. It's a great occasion for the GST and Indirect Taxes Committee today. 11 publications, 11 books, 11 intellectual experiences of so many chartered accountants. And we have here with us a wonderful panel, CA K. Suresh, CA Suresh Dasarathi, and CA Sandeep Batra. Each and every one of them bringing with them about 3 decades of professional experience, intellectual expertise. To begin with, I will request CA K. Suresh, the CEO and President of the India Cements Financial Services, to talk about his industry, to talk about the issues on GST, and commence this webcast and commence the knowledge share right away. Over to you, CA K. Suresh. So you can unmute yourself, sir.
Shri CA Atul Kumar Gupta ji, President of ICAI, Shri CA Nigar N. Jambosriya, Vice President of ICAI, Shri CA Rajendra Kumar, my close friend and Central Council member, Chairman of GST and Indirect Taxes Committee, Shri CA Sushil Kumar Goyal ji, Central Council member as well as Vice Chairman of GST and Indirect Taxes Committee, my co-speakers, my brother and CAs, and friends. Good morning to all of you. Really is a great morning today to have a launch of 11 books authored by 14 authors. That too during the lockdown. That shows the commitment of every member of this profession to support the knowledge requirement of all of us. In this midst of this lockdown, of course the lockdown period has gone. Now Unlock 1.0 started, as President said. We are going to talk about industry perspective of GST. I am here to talk about the service sector aspects. Currently, the service industry is heavily impacted with the onset of coronavirus in India. Of course, you know that COVID-19 has taken a huge toll on every spectrum of the service sector, particularly tourism industry, hospitality industry, hotel industry, and because all arrivals have been banned, international arrivals have been banned. Of course, indirect taxes have always been contributing more than direct taxes to the government's revenue. As of today, if you see the revenue share, indirect taxes overtaken the direct taxes, reverse happened because of GST introduction. Services solely contribute a major part of the whole gross domestic product, GDP. Subsequently, it shows the major contribution of services and taxes also. So the beauty of services sector is that it contributes in GDP as well as in collections of taxes also. Services sector does not only dominate the GDP contribution, but also attracts the foreign investment towards the Indian economy. In other words, it pulls money from abroad for the purpose of our forex reserves. Service sector contributes significantly in export as well as provide a large-scale employment. I think all of you know that more than 60% of our GDP is this. So that means that gives the largest thrust to the employment also. India's services sector covers a whole variety of activities such as trade, hotel, restaurants, transport, storage, communication, financing, insurance, real estate, business services, community, social and personal services and services associated with construction. I mean, a wide variety of activities. If you remove majority activities of manufacturing, other things, the rest of things, most of things will fall into services. That's why a huge chunk falls into this sector. Now, if you see the GST on the service sector, I know that, every one of you will accept the fact that India's biggest reform, tax reform, is GST, because it changed totally the tax structure as well as become a single tax throughout the nation. That is one nation, one tax system is helping in reducing the tax evasion. So the purpose of GST introduction is that first, reducing the tax evasion or rather preventing the tax evasion and putting in place a transparency. I think having introduced e-way bill, so many developments, it's very clear that government is, making us to go through a transparent world of transactions. Rather, nothing can be hidden or something like that. It's good for the economy, good for the country, and good for everybody who are all stakeholders in this whole process. The amount of procedural compliance and paperwork decreased immensely due to the subsuming of many consumption taxes and bring it under the one tax, namely the GST. We have clubbed everything and put into one to reduce the burden of compliance, etc. And that one way is very helpful to the society, one way is helpful to the country, one way is helpful to all consumers also. Particularly consumers will benefit from the free movement of goods. I think how many of you know that a huge savings has been done in the form of time consuming for the movement of goods, as well as consumption of fuels reduced a lot. So that gave a lot of thrust to the importance of this GST across the country. GST on service sector, introduction of GST in India is a substantial shift from the current tax, that is from the service tax regime. It is expected that service sectors, It is expected that service sectors will have a major impact on GST than the manufacturing or trading sector. Among the services, particularly, we can see the banks, NBFCs, financial services such as fund-based, fee-based, insurance, etc. will form the whole gambit of the service sector. Owing to the nature and volume of operations provided by banks, NBFCs, vis-a-vis the lease transactions, hire purchase, related to actionable claims, fund, non-fund based services, GST compliance is not as easy as you think from the other side of the table, because each transaction is of so much complication, with so much complications and so much intricacies. That's why GST compliance is not as easy as we think in respect of the services, particularly financial services. GST on financial services overview. Normally financial services, nothing but loans offered by banks, NBFCs. They are not affected because they are all money-to-money transactions. So hence no GST on loan as well as on the interest charged on loans. In banks, NBFCs, however, the lease can be either supply of goods or supply of services, both of which attract GST. Here only the problem starts actually, because the lease, there are two types of leases: financial lease, operational lease. In case of financial lease, of course, the goods is with the company which advances the money as a matter of security only, but it's not treated as a loan, rather money-to-money transaction. It has been treated as a service, rather supply of service or supply of goods. Hence, GST is attracted. Hire purchase, another area in which buyer of the asset pays regularly installments and takes the possession of the asset from the starting of the agreement. However, the ownership is only transferred, only all the installments are paid. Here also GST becomes applicable because of supply of service as well as goods. The most important issue is registration of place of business. See, GST registration rules are rather simple for the service providers if operations are confined to only one state. I think all of you know that the services sector, particularly financial services, as a part of financial inclusion, spreads its wings across the country. Naturally, I have to have many outlets, many states, and many branches will be there. That's why the GST compliance, if I am having only one state of operation, then GST compliance is very simple, nothing to worry. And particularly input tax credit will be more, I can easily pay the GST and come out of it. But if my things are spreading across the country, that is more than one state, then it becomes a very tough to compliance, ensure the compliance. Example, I will tell you recently, Kerala added a flood checks in GST. Even though many companies have branches in Kerala, have come to know that only after a certain time of, element of time only, because we are all not able to have a proper mechanism of getting the information for proper compliance. If same thing is going to happen in every state for every purpose, then the compliance becomes very difficult for the financial services. And another important thing is we have to register in every state. Because financial services earlier under the service tax regime, it's one registration and sub-ledgers will be there, very easy to comply, ensure the totality. I think government has to come out with some ideas, innovative ideas, to bring this type of what is called easy registration with control over the sub-states, rather other states, so that compliance will be easy, assessment will be easy. So no, there is no proper system. As of today, I have to ensure registration in every state, every place for the purpose of GST. That calls for a lot of time and energy. Most important thing is, in the case of service sector, ultimately we are servicing clients. So the cost of service is increased. Earlier in service tax regime, we had only 15%. Of course, there were some Swachh Bharat cess and Krishi Kalyan cess were there. But now, the rate of tax, gone up from 15 to 18 to 20% bracket. In other words, for every type of service, the service getter will pay more because of this higher tax. What ultimately it means, we are taking huge money from the system, from the consumers, and the consumers are not at all, benefited, because in the service sector, most of the consumers are retail consumers. Whether they will take the credit of those taxes, no. They are not going to take the credit of that. That's why the whole system has to be, rather the tax burden on the service sector can be tweeted back to the earlier level, if at all, or even lesser than that, because once you tweet the rates to a lower level, naturally the volumes will be phenomenal. Because of volumes, you will get back what you are going to lose by reducing. Definitely you will get more, because people love to do more and more transactions, more and more things. That's why I think government has to think on this side also, how to reduce the cost of service to the various consumers. Next is administrative issues. See, the centralized system of accounting is every business is not possible now because of registration. We are going to have in every state. In every state, we are going to have the registration issues. So every business in every state is financially accountable to that state for taxation. What is the meaning of that? Every state will, issue the notice. Every state will ask for due compliances. Every state will ask for submission of accounts. That means even though I'm having a centralized corporate account setup, a mini corporate account setup is required on each state, which calls for additional burden of employee cost, additional burden of administration. All those things are there. Similarly, burden of filing returns. So as a business owner, you will have to file returns from all the businesses in all the different states separately. 36 states roughly, including union territories. Filing returns is not easy job, and naturally it will take 2 to 3 days for every company to ensure the filing of that. Not only that, you should also have a point of contact in each state in your office to ensure that properly it is covered. So that's why the burden and tiresome is increased because of this individual registration. Next is place of supply. The place of supply will be the location of the recipient of the services on the records of the supplier of services. For example, in a digitalized and centralized scenario prevailing in India, identifying the state of location of service recipient will be quite difficult. So in cases where the service recipient, like professionals, manufacturers, traders, other workers, often shift from one place to other in search of better opportunities, the service provider may have a different address, namely permanent address, current address, address of communication, KYC address. That means so many issues are emanating from this digital world as well as other scenarios. That's why we have to think of how to simplify this process. Next is input tax leverage. Banks and NBFCs have the option of reversal of 50% SENVAT on credit availed against inputs as well as on the capital goods. Whereas under the GST, that facility is not there now. That means simply I have to forego. Being an NBFC, I have to forego 50% of my input services on input tax on input services, capital goods, because of a simple condition, rather simple legislation of 50% waiver. Since because of I'm having many transactions, etc., this 50% restriction has been brought in. But this leads to a lot of, what I can say, the leverage of input tax credit is missed by many companies. So this calls for a proper study how to ensure a proper utilization of input tax credit, because ultimately input tax credit benefit is given for what? To pass on to the consumers so that a less operating cost will be there. So we have to think from that angle how to pass on this finally. Next is assessment and adjudication. the assessment would be done by the respective state regulators under which respective branch is registered. So every time the branch will be issued notice, or the regional office which is in that state will be getting the notice, then in turn from the head office somebody has to rush in. If at all you are not having a proper person there to coordinate and to see that proper assessment is done and appeared also. So this is this is not easy as we think. Practically, if you see, it is a very difficult job. And with GST, more than one adjudicating authority will be involved. So the difference of opinion between one adjudicating authority to the other also happens. So one state may have a view, or the other state may have a different view for the same company. I am having the same company, but the views will be different from one state to another state. So for further litigation, then resolving that litigation, then that litigation applicable only for that state, then I am bringing back to the other state. Like that, there is a chain of reaction and chain of problems. Hence, it is very difficult as far as the adjudication is concerned. Clearing up and dealing with the difference of opinion provided with the different adjudicating would be very difficult. Non-account linked financial services. The place of supply of service here would be the location of the service provider. So this will again hit such companies which are widespread in remote locations to establish their presence but operate and transact from a back office located in some other state. Actionable claims do not constitute a service under service tax, whereas here it comes GST. Actionable claims are included in the definition of supply of service. So we have to think loudly how to avoid this. Services provided from bills discounted to securitization now will be taxed as affect B2C, B2B majority. As a stockbroking outfit, I am just giving an example. 1 lakh worth of shares purchased. What happens? See, we are talking about one nation, one tax, so subsuming so many taxes into the system, only one tax we are giving to the consumer. But ultimately, if you see in a stockbroking outfit, for purchase of just 1 lakh, STT I am paying 100 rupees, stamp charges I am paying 6 rupees, transaction charges I am paying 3.25 rupees, SEBI turnover fees 20 paise, GST on brokerage. Brokerage is different, 20 rupees if you think brokerage. Then GST will be 3.60. GST on transaction charges 0.59. See, ultimately, a trader has to pay a 113 rupees around as a part of taxes. So we are claiming one tax, one regime, one nation, but still this type of taxes are there in the system. So now I think GST committee as well as the government should think loudly how to reduce. Once again, I'm coming to the same point. How to reduce the cost of service. See, for example, in India, the retail participation in stock market is only barely 15 to 20%. Whereas in other countries, it is more than 70%. So in order to reach a reasonable level of retail participation, this particular cost of service has to be tweeted. If otherwise, people may not do more trade, people will feel the cost more effective and they may not be interested to do trade also. So government has to think. I think already stamp duty is being talked about, bringing under the GST. I don't know how you are going to do this STT. Besides this STT also, we are having capital gains tax, short term as well as long term. So in a security broking outfit, the impact of this is very phenomenal and we have to, put our mind and thoughts on this. Next is issues in returns. The HSN code-wise details entered in GSTR 1 is not being captured in the GST annual return statement. This is a problem actually. That has to be removed now. That means automatically if it is there, it should come here. Why it is not coming there? Because we have to re-enter again in GST 9. There is no option to enter HSN details of the ITC claimed in the monthly return, whereas in the annual return, filing the details of HSN of ITC has to be entered. See here, the reverse is happening. So we have to allow the HSN details to be entered in the ITC claim, so that automatically we will have the benefit in the other side. While entering the ITC details in the GST 9, we are asked the bifurcation of ITC and reverse charges like goods, services, etc. But the same is not available in the monthly return of GSTR 3. So when here asked, and automatically it has to be stretched to the GSTR 3, and it is not there. Once again, I have to go back and redo it. In a financial services, when you have two types of vehicle, out of which one is not subjected to GST and the other is subjected to GST, then always a dispute comes. How much quantum of ITC I can claim? Because the auditor, statutory auditor will have a different view, my CFO will have a different view, and internal auditor will have a different view. So that, what I am suggesting is here, a simple formula can be adopted, either some 5% or 10%, something like that, so that particularly in our line of business, in money changing, etc., when I do a bulk business, it's not subjected to GST. But when I do a retail business, it's subject to GST. But both are done in the same office. Same telephone is used, same manpower is used. Then how can I bifurcate a portion of the cost for the purpose of this and that? That's why there is a problem in allocating the cost for claiming the ITC. That's why there must be a simple mechanism of fine-tuning for the purpose of claiming the ITC. Next, suggested solutions. H&M details entered in the monthly returns has to be fetched automatically in the annual returns. Once it fetched in monthly, it should be in the annual return, so that it saves a lot of time. HSN details of the ITC has to be included in the monthly return, and same has to be captured in the annual return. These are all addressing earlier problems, which I told you. Bifurcation of ITC, goods, service, etc. should be included in the monthly return, and same can be captured in the annual return. I suggested, as I said earlier, a fixed percentage of claiming ITC should be defined irrespective of the composition of exempt and non-exempt segment of business, so that when financial services are there, you cannot define, how much to exempt, how much to do by manually working out, because a lot of costs are centralized, a lot of costs are common. That's why we need a simple percentage system for addressing this. So my conclusion is that with the expectation of further details to emerge, financial sector space a can of worms in terms of the manner of transacting business, customer profile, services, matrix, IT systems, and operation to capture the data at both front and back end. IT systems will need to be more vigilant in terms of serving the purpose of solving the complexity related to GST compliance and procedures at a higher volume. So the impact of GST on banks and NBFCs will be such that operations, transactions, accounting, and compliance will need to be reconsidered. My kind suggestion to GST committee as well as ICAI and also government is that a proper study has to be done by each stakeholders. How much is ITC, even IGST being utilized? For example, you are allowing IGST can be used for the payment of CGST as well as SGST. But you are not allowing CGST for the payment of IGST. The reverse is not allowed. I think both are central government only. You can think of some mechanism to allow the reversal of CGST to IGST. Because in a financial sector setup, I may have more IGST which may be compensated against the CGST and the SGST. Similarly, I'll have more CGST which has to be compensated for IGST due to some other services. That's why a reverse mechanism must be available for using at least CGST to IGST and IGST to, of course, IGST to CGST is there, but CGST to IGST must be there. With this, I am concluding my presentation. Once again, I am thanking ICAI, GST, and Indirect Tax Committee for giving me this beautiful opportunity of sharing some of my few thoughts on the financial sector, namely the services sector. Thank you.
Thank you, CA K. Suresh, sir.
Yes, sir.
On behalf of the GST and Indirect Taxes Committee of ICAI, in fact, there may be few questions which may be there in your chat box. If they are there, can you please take the trouble of answering those questions if they are there in the chat box, because we don't have the chat box link over here. And the committee informs me that the chat box link may be there in your...
no, I'm not also getting it.
Yeah, okay, but doesn't matter. We will come back to you, sir. Please stay live here.
Yeah.
In the meantime, I would request CA Sandeep Batraji, the CFO of Crompton Greaves Electricals Limited, who is here with us from Mumbai and who hails from a very, very illustrious background of industrial exposure and experience. CA Sandeep Batraji will now enlighten us on the manufacturing aspects of his industry, the consumer durables industry, and so on. Over to you, Sandeep Batraji.
Thank you, sir. Thank you, Mr. Kumar, and a very, very good afternoon to all who are there on this webinar. As I pull up my presentation, I would obviously like to thank the President of the Institute, the Vice President who inaugurated the webinar today, as well as the Chairman and the Vice Chairman of the GST Committee for inviting me to share my thoughts. I must confess, when I asked him how many people will be there, he said there will be close to 5,000 people. I said, look, I've never spoken before such a large audience. So obviously it's a great privilege for me. Is my presentation visible?
Very visible, very nice, Sandeep Batraji. It's a very good GST Conclave industry perspective with our committee. Thank you so much. Please proceed.
So, and I'm very thankful to Mr. Suresh to set the tone of the webinar, and I really appreciated the candidness with which he shared his thoughts. I must confess, I am no expert. I am not at all a subject matter expert. Indirect tax, when I was doing my CA many years back, obviously never existed in this form, but whatever it existed, that was not my most favorite subject. But yes, when you start working, you become a practitioner. And over the course of years, I have learned a little bit. I have seen how the country transitioned from sales tax to VAT, and then about 3 years back from VAT to GST. So as we approach the third anniversary of this transition, and when Mr. Rajendra Kumar approached me to share my thoughts, I kind of reflected at the last 3-year journey that it has been for Crompton when it came to GST. And those are the thoughts that I have captured in my presentation, and which I am now going to be sharing with you. But before I start, quickly a background about Crompton Consumer. What kind of company are we? So that you will be able to better appreciate the kind of challenges that we are facing. We are into manufacturing and selling a wide spectrum of electrical consumer durable products, ranging from fans, lights, pumps, light fixtures to consumer products like water heaters, grinders, air coolers. We have a pan-India presence, which we address via 22 states in which we have GST registrations, a total turnover in excess of 5,000 crores, market leadership in products like fans and residential pumps. And I think the last point on this slide is all about the kind of volumes that we deal with. Every day we are churning out nearly 4,000 invoices. And given the nature of the business, the nature of the channel partners that we deal with, nearly 1/6 the number of credit notes, as many as invoices as we have. So very transaction heavy business, and when 3 years back, when this whole transition was happening, we were very delighted, excited at the kind of benefits that this transition promised, and I think we've been lucky to get most of the benefits. The fact that now we have one nation, one tax, goods and services are now charged to the same rate. There is no tax arbitrage that is created by different states levying different taxes, and hence you don't have infiltration of goods simply because of tax arbitrage. I think the number of taxes that have been subsumed in GST, I think, is well known. It's made life much simpler for organizations, and there is no follow-up required for forms, be it F form, C form, or whatever number of forms that were there. And the advantages of technology cannot be underscored. I mean, we've been able to 100% centralize all our GST compliances. In the VAT regime, we had one representative in each state because he needed to liaison with the local VAT offices for filing of returns, for collection of forms, and so on and so forth. All that is now can be done digitally, and we have in Crompton centralized the entire compliance payment process for GST in Mumbai, and that was certainly possible only because of digitalization. However, having said that, it's not been a bed of roses. It has not been smooth sailing all through. There have been many issues that we have faced in the last 3 years as GST has got deployed. But what really gives me confidence and comfort has been the speed at which these have been addressed by the authorities, the way they have responded to representation, be it from industry or from other stakeholders, and there has been fairly prompt intervention and resolution of the issues. Having said that, there are certainly a few challenges that we in the consumer electrical industry face. These are not unique challenges. These would be situations that I'm sure would manifest in other companies in different contexts. And I have, here summed up 5 of the challenges that I would like to cover in my presentation. The first one relates to the challenges of an inverted duty structure. We see it in 2 of our products. I'm sure other people across the industry would be experiencing in other areas. As I mentioned earlier, we have close to 4,000 invoices a day, 2.5 lakh credit notes a year, and that becomes a big challenge in terms of dealing with them from a GST point of view. If it benefits us, then it creates some problem for the channel partner. If it benefits the channel partner, then it creates some back-end challenges for us. And therefore, I wanted to cover this whole issue about conditions that are currently relevant for allowability of credit notes post-supply. I think when GST was deployed, the biggest USP was technology. That we would have a portal where there will be auto matching of what the provider of service has paid, and basis that matching, only the recipient of service could take credit. And that would have ensured that there was no reconciliation required to be done, because there will be only one version of truth. Unfortunately, that technology has somehow not delivered what the promise was. Initially, there were technical challenges in terms of the ability of the system to handle the kind of load. Thereafter, the government made many exceptions, allowed many deviations, and today we have a bit of a hybrid system that is operating, which creates its own associated challenges. The third and the fourth point both relate to the challenges around this whole matching of tax paid by the service provider and the eligibility of the recipient to claim it. The last point is a transient point. It has a finite life. This was all about dealing with how will the government compensate companies who had set up manufacturing facilities in excise exempt zones, because prior to implementation of GST, these companies they were exempted from payment of excise duty, but now they are required to pay GST. So how does their refunds get adjusted and taken care of? And what I will do over the next 10 minutes is cover each of these points in a little bit of more detail, as well as offer my own solutions. Obviously, these are very selfish solutions, which are all from my companies and my point of view. I'm sure that the government could find a better and a more elegant solution, but I think a solution is certainly required to these problems. The first one relates to this whole inverted duty structure, and I'll wanted to illustrate the challenge by kind of sharing some details. So we make a product which is used for handling water. These are all technologies depending upon how is the water pumped up from the water table. These are products that are required for a common man. You and I need it in our houses to get water from the underground reservoir to the overhead tank. The farmer needs it in his farm as he extracts water for irrigating his fields. And therefore the government has been quite kind to levy only 12% GST on these products. But is the farmer or is the end recipient actually benefiting because of this 12% GST? Probably no, because the manufacturer who's making these products is buying raw materials which are liable to 18% tax of GST. And if his output GST is 12%, he's left with two choices. Either he gets this GST credit that is accumulating in his books refunded by the government, or he builds it into the cost of his product. Initially, I'm sure every manufacturer would have, relied on the fact that yes, refund will come through, there will be clarity in the process, everything will be digital, and therefore he may have not factored the fact that there is a credit accumulation in his books when he priced the product. But the whole refund process has been so cumbersome, it has taken so much time, it requires interface with the government machinery, and therefore either the person may find a very easy way and say, let me build it as a cost of my product. I am not very confident at the time at which I will get it. Even if I get it, what happens to the cost of the capital that has remained blocked? Because I have paid my vendor at the rate of 18%. The refund, the differential, I don't know when I will get it back. So let me, if not build the cost, at least build the cost of capital in my products. And in the end, it's the end consumer who suffers. While yes, the manufacturer suffers because he has to undergo the administrative challenges. It's his balance sheet that bears the capital that gets blocked in this. But in the end, every smart businessman will figure out his return on capital and he will roll it into the price. So in the end, it's the consumer that is paying the fact that the inputs are taxed at a much higher rate than the output. One small suggestion, if the rates cannot be harmonized between input and output, at least let's have a transparent, time-bound manner for the refund, and obviously payment of interest in case the refund is delayed beyond the committed date. So that was one point. The second point relates to something which is an established trade practice in India, which is you have a price at which you invoice your channel partners, at which you bill the customer, but then there are many schemes that you may run to boost the sale of your product. And those schemes could be volume linked, they could be value linked, they could be a significant amount of outgo that the company has by way of these schemes. It could be anywhere between, at an aggregate level, 6-8%, but to specific channel partners, it could be 10-12%. Now, this challenge existed even prior to GST about can you give credit notes with VAT? At that time, it was not so much of a challenge because the VAT rates may not have been in the high teens. Maybe VAT rates would have been 12%. Now with GST rates at around 18%, he reverses input credit proportionate to the discount that he gets, and it can be correlated to the relevant tax invoice, makes it very, very cumbersome. Moreover, in our industry, while it may be desirable, expected that all these schemes are decided prior to the date of sale, there could be many decisions that you need to take which are tactical, which may be something that you discover after the month has started, somewhere towards the end of the month. You may have to do tactical in being blocked with our channel partners, who are all small businessmen. Some of them may have even opted for a compounding scheme. So for them it becomes an additional cost of doing business, and therefore our suggestion is that the discount, whatever it may have been, if I have, as the manufacturer or supplier, if I have passed it on to my customer, the GST credit on the same should be allowed. Obviously, with an understanding that the recipient of the supply will reverse it. We are not saying that both parties, that one should have one's cake and eat it too, but make the process relatively more simpler. I think this whole issue of linking the credit note with each an individual invoice will make the life very, very complicated, both for the supplier and for the recipient. I mean, imagine if there are 15 lakh invoices that I have issued, and if I have to issue 15 lakh credit notes each, and each invoice may be eligible for more than one scheme. So it is possible that I am issuing 15 lakh invoices, but I am issuing maybe 30 lakh credit notes because of the requirement to match each credit note to the original tax invoice. It's a nightmare that is best avoided. The other challenge is all around the technology, which was supposed to be the big differentiator when it came to GST. Some time back, the law was changed to allow credit notes, one credit note to be issued against multiple invoices. Something that the industry had been asking for, something which our channel partners had been asking for. However, the portal while filing the GSTR return, this portal doesn't accept one credit note against multiple invoices. So the intent is very noble, but last mile implementation could be better, and hence that again goes back to the same process of having to issue multiple credit notes, one for each invoice. I think the second point on this slide is been well debated, and it's a long pending issue of how do you, that whole distribution of the Tran 1 opening credit for the ISD registration is still not available on the portal. So credit is available, but if I was an input service distributor in the service tax regime, whatever credit remained on the date of the transition, that is still a working capital blocked for us, and we are having to discharge our output liability by paying cash, and we don't have access to that portal, the opening credit that we had. So I think our suggestion is that this functionality should be updated. The portal should allow one credit note against multiple invoices, as well as the ISD distribution facility should be made available. I think a few months back, the government had introduced a condition that you cannot take 100% input tax credit if the supplier has not updated or updated the returns on the portal, and there was some limitation on how much credit you could take. Now that is something that is best avoided because as I mentioned earlier, the biggest USP of GST was that there will be no reconciliation. There will be a big IT system which will match the taxes paid by the supplier and will enable the recipient to take credit. So I think if we can get that functionality in place, then this working capital blockage that companies are having to face can be well avoided. And all matching can be done online and real time. The last point, challenge that we are facing, and as I mentioned at the beginning, this has a time limit. Fortunately, all our units in Himachal Pradesh have completed their tax holiday period, the last one being on 31st of March. So there is a terminal issue to this challenge, but I think this again is an area where the government did announce that they will ensure that no taxpayer suffers any loss because of GST. But in this area, I think the actions on ground have not delivered the intent. As we speak, we have not got refunds for all the GST that we paid nearly a year back. So there is a significant amount of pendency, as well as we have not received 100% compensation of the loss that we suffered. There was this big tussle between the states and the center who will bear what part of the loss. So not only has there been an reduction in the benefit that we were availing prior to GST, I think there has been significant amount of working capital blocked for us. But as I mentioned earlier, this is a terminal issue for us. We have only about now 2 or 3 quarters of refunds left. So the sooner it is done expeditiously would be of big help to us. So that's all I had. And you know, if I were to look back and look at which has been the biggest, I would say, disappointment when it came to GST, I would say it has been in the area of technology. I think these issues like one about the delay in making the refund payments, this whole issue about inverted tax structure, these are either very, very industry specific or they are very terminal. But I think the biggest area that I personally expected transformation was in the area of technology, where which would significantly help compliances, which would put everybody, be it an organized company, an honest taxpayer, at an elevated footing versus somebody who may not be wanting to meet and do 100% compliance. Unfortunately, that has certainly been a bit of a disappointment, and the sooner that gets addressed, that would be a big positive. That's all I had to share from the perspective of a consumer electrical industry. And before I conclude, I would again like to express my thanks to the Institute for allowing and giving me this opportunity to put my views before you, and specifically to the chairman of the Indirect Tax Committee, Mr. Rajendra Kumar, for reaching out to me and for inviting me to be part of this afternoon on this Sunday. Thank you very much.
I'm sorry. In fact, esteemed friends, this was Sandeep Batraji who was giving his views on the GST issues in his industry. In fact, Crompton and Greaves is about 150-year-old company. Originally started in 1878, and then the first factory that was set up in India was somewhere in 1937 by two brothers, Crompton and Greaves. That is R.E.B. Crompton and James Greaves. In fact, Sandeep Batraji and K. Suresh both of them were very, vocal, and they were of the same view with respect to input tax credit. Both come from diversified industries background, while there is restriction of credit as far as Suresh sir's industry is concerned, the financial services, the restrictions are more prevalent as far as the manufacturing is concerned. In fact, sirs, both of you would have got questions, and before I invite Suresh Dasarathi sir to speak on construction and works contract and throw light, if there are questions which you could answer, they'll be there in your chat box. I'll be greatly obliged, sir.
Yeah, one question. I think I talked about the IGST and CGST adjustable, One of my brethren, he said, yes, it is fungible. I'm not against, I know that it's fungible. But what happens when you have a setup of registration of each state? In one state, I'm having CGST surplus. In another state, I'm having IGST payable. But I'm not able to use the CGST to that IGST. See, within the state registration, yes, you are correct. Fungibility is there. We can make use of it. But as a company as a whole, my working capital is affected. Because this CGST is get for refund, that IGST is go for payment. But getting refund takes time, whereas payment has to be made immediately. So my point of view is that sometimes, this type of inter-adjustable has to be made, or rather given available to the entity, company as a whole, even though I'm registered in a different state. That's what my point, sir. I think Mr. Rahul raised this point. I think he's right. Fungibility is there, but my question is company as a whole I'm talking about. Next is anything else to my area, sir? Lot of things on constructions I have seen, questions. I think
in fact, there will be construction related questions also. If there are any questions relating to your area, you can browse through. And I would request Sandeep ji, if there are questions relating to your area on your chat box, you may please enlighten our viewers who are today more than 3,000 plus in numbers watching.
Actually, one question from one viewer, Mr. Mohan, that now this COVID situation is an extraordinary situation. So what he suggests is that when GST, already they have raised the bill and paid the GST, but in the present regulation, it is not possible for the GST registered person to claim the GST refund or set off against the bill, which is not cleared by the clients or customers. So what he says is, temporarily you can allow the GST to be either refunded or allowed to be set off with the future liability if the bills are not set off as a bad debt. That's what one suggestion from Mr. Mohan he has given that.
Thank you, sir. Thank you very much. Batraji, for you.
Somebody wanted the entire presentation. I think Mr. Rajkumar.
Yeah, the presentations will be certainly hosted by us on the IDTC website, sir. It will be certainly hosted. In fact, there are many questions now. I've just received the questions link, and I could see many questions on construction. There's a question which talks about 194C. I do not understand the difference between what is 194C and then, in fact, there have been also questions where people are asking with respect to the ITC restrictions that the manufacturing industries face. Sandeep Batraji, will you like to take up these questions right away? ITC restrictions, because Section 17.5 or Section 17.5 of the CGST with respect to ITC restrictions, how does your company, if such a large conglomerate, how does it handle that, sir? Sir, you can unmute yourself, Sandeep Batraji.
So I think what we have done is, we've had to look at technology to kind of make sure that these mismatches that are there, so we have two things. One is we make sure that all our purchases that we do in a financial year, we promptly book the invoices for all those purchases so that we don't reach the deadline of September. And secondly, we've started this every month reconciliation between what we are showing as purchases and what the vendors who we have bought these material from, whether they have uploaded those invoices on the portal or not. And this online matching is the only way. But instead of every company trying to do their own online reconciliation, as I mentioned, the portal could be made live and functional. That will help every taxpayer.
Thank you, Batraji. There's one more
Yeah.
question which one of the CA Rajan Garg from Noida is asking you. It is
Yeah.
regarding inverted duty structure which you are mentioning. This
Yeah.
is a very complex issue he claims for business since inception. Can you
Yes.
please apprise us about your efforts to resolve this issue with the government? Has your industry taken it up with this government? Because when there are multiple of rates, there's bound to be inverted tax structure, as was there in central excise era. We did find inverted duty structures, and the same follows as far as GST is concerned. What are your views on this, sir? Can you throw some light?
So we have obviously via the various industry bodies that we are part of have taken it up, because it is obviously not something that impacts only us. It impacts everybody in the industry. So various representations have been made to the government to address it at inception by changing the tax structure. But I am cognizant that it can never become a perfect system. So I think it is equally important that the government put in place a system where these refunds are given in a time-bound manner. Obviously, I can understand that there could be worries in the government about leakage, etc. But I think, you will have to A, rely on the honesty of the taxpayer, and B, at the back end, the government will have to have some very robust data analytics to pick out people who are misusing this facility. But just this apprehension that if you start giving refunds, people will misuse it, means that you are treating every taxpayer with the same brush. So my suggestion and the way we are working with the government is to make sure that the refunds are processed expeditiously. At the same time, the government should track and have data analytics to ensure that any misuse is prevented.
And
Thank you, Batraji. Yes, sir, Suresh, sir.
Yeah, one Jeshri from Trivandrum. From Trivandrum, I think what he suggests is a one-time amenity scheme or something like that to claim all ITCs, which they missed due to various reasons, particularly during COVID situation. I think he says it will bring back the comfort to the business people, and it will take India to the next level. That's what one of the requests to.
Thank you. Yes, thank you very much, sir. In fact, there's one question which one of our co-opted members and special invitees to the committee, Arvind Bansali ji from Reliance Industries, it's basically not a question but a comment that he has made is the input service distributors distribute ITC to SEZ units also. There is no visualization of getting refund of such amount similar to what was there in erstwhile service tax regime. I think Suresh sir and maybe all three of you will certainly appreciate that SEZ have always been a talk of concern when it comes to service tax or excise duty or GST. How do you deal with this? All three of you maybe can take this question. It's a common question which the entire professionals in the industry face. SEZ. Batraji, first yourself.
I think this is something that the government will have to address. You cannot have different methods of distribution for different class of taxpayers. But obviously, the way the credit accumulation for certain class of taxpayers will be taken care of has to be addressed by the government. So, government will have to put in some place of very, very expeditious refunds to this community.
Thank you, sir. Thank you. Suresh Dasarathi, sir, even though your presentation is there coming, can you please take a quick call on this SEZ and how does your industry deal with this, sir? You can unmute yourself.
I have this particular subject on my slide, and therefore I will address this question when I get to that slide.
Thank you, sir. Wonderful. That's a great answer, great reply. Suresh, sir, financial services.
Yeah.
Anything,
Actually, of course, I'm not directly linked with SEZ, but as when I do the ISD distribution of ITC to SEZ, naturally that portion has to be refunded. I mean, there must be some mechanism, I mean, if it is not there, then what is the purpose of distribution of ITC? I am distributing ITC to each unit on the basis of their own contribution. That means I should get back that ITC,
Thank you, Suresh sir. Thank you. In fact, there are also a few more questions, but before I go to those questions, we'll come back a little while later. May I now request CA Suresh Dasarathi, who in fact is a very, very eminent professional, a chartered accountant, who has carved a niche for himself, both being as an entrepreneur and now as a professional heading the finance division of a very, very reputed construction works contract industry, interior industry from Chennai, Soundarya Decorators. In fact, their tagline says, Soundarya, transforming spaces. A place that echoes the power of universe, a place that shapes the interiors, the way interiors are conceptualized and built, a place that gives a new dimension to dreams, a place that brings spaces to life. Soundarya is a pioneering interior contracting and custom furniture manufacturing company with full of energy. The energy is to think big and achieve bigger. Over 2 decades, they have grown to become a 100 crore company in this segment. Suresh Dasarathi sir, the whole of India is now looking at you to give your views on construction works contract industry. There are about 3,500 members eagerly waiting to hear you, sir. Over to you. Thank you very much.
First of all, greetings to the President of the Institute in absentia, to the Vice President in absentia, as well as the Chairman of the IDTC and the Vice Chairman. Thank you for the invite to be present at this webinar and be one of the speech deliverers. You used the word eminent professional. I'm not sure whether the adjective is appropriate. Yes, I'm a professional. That I accept. Okay. So, let me get on to the presentation. Are you able to see the presentation?
No, sir. And please screen share it.
Yeah, I'm sharing that. One minute.
Yeah.
Oh, so responding.
On the top, sir, on the top screen share will be there.
I know, I'm doing that screen share.
You click that, then you go to your PowerPoint. That's it.
Sharat sir, do you have this presentation of Suresh sir with you?
No, sir.
I think on the top next to mic, one square is there.
I know, I've clicked that share.
Very good. Then it will show you to Microsoft PowerPoint something. Click that. Then it will take you to your, already open your PowerPoint?
Yes.
Then it will take you to PowerPoint. Directly you can.
May I suggest, Mr. Dasarathi, that on your desktop, close all the other files that you don't need. Just leave the PowerPoint file on, and then when you screen share, it will take you to that file.
Right.
Because if you have too many files, then it can get confused.
Or maybe, sir, you can look at your presentation and you can start speaking, sir. And you can send the email to us and we will distribute. We will put it in the institute's site. It doesn't matter at all. We have a look at your presentation and you can speak, sir. No problem.
Now, what is the problem, Suresh, sir? What is the issue,
No,
sir?
I've clicked share, and then I have clicked on the Microsoft to share the PowerPoint, but it says not responding.
Sir, if you're readily available with the mail, so you can mail me, I will share.
Okay, now which ID should I send it to?
GST at ICAI. Same ID, sir.
GST at ICAI.
At
GST.com.
ICAI.com.
Dot in.
Sorry, dot in. No.
In fact, members in the meantime can maybe send your questions. There are about 100 and odd questions that have come to us, and we are extremely delighted that our esteemed panelists have taken the trouble to answer these questions and also guide us. And the majority of the questions today, as expected, are from the construction industry, and then certain questions are with respect to the ITC and such other areas. In fact, some of you have asked, sir, where will the publications of the institute will be available? Let me assure you on behalf of the committee that all the publications of the institute, of the GST and Indirect Taxes Committee will be available for a free download tomorrow at idtc.icai.org. This is the website, friends, idtc.icai.org. All the 11 publications which are launched by the Honorable President ICAI will be available for a free download. After the lockdown is lifted, the printers started working, the post offices, the couriers start working. The printing of all these publications will commence, and the hard copies will be available for sale at a very, very nominal price from the institute side. You can always order from the central portal of the institute, and you will certainly get it. In fact, our authors today, we are delighted that our authors are eminent chartered accountants who have written these publications for the institute. They have spared their valuable time, and they have also spared their intellectual treasure by sharing this by sharing their value of knowledge to all of us. Give me a moment. As the email is being done, we will go through that.
Have you emailed, sir?
I've sent the email. Has Sharad received it?
Can you send to me also? I will help you otherwise. Can you send to me? Can you see you at iccaps.com? I can open it for you.
That is being shared by the committee. I just got a telephone call and they have been doing it in the meantime. It is my proud privilege. Yes, they are doing it. Okay. Yes, please. So we are in fact on the job, and let me also thank many of our authors who are here today this morning and who have shared their intellectual knowledge. We have Samad Ahmed and Madam Viral who worked on the registration aspects of GST. We had CA Ganesh Prabhu, we had Shankar Narayanan, Rajesh Gupta, Rajesh Saluja ji, Navya Malhotra ji. Then we had various other professionals. I would certainly read out the names as we proceed through this various this particular webinar, esteemed friends. These type of issues do happen when we are not able to access the link, and there are certain hiccups as far as the link is concerned. So please give us a moment. And as all of you know, construction industry has always been an issue right from the inception. And even here, when the presentation is being made, it certainly creates an issue for all of us.
Anyway, let me start. I've sent the link to Shara. I think they are sharing it.
Okay. Yeah, you please proceed, sir. You start.
Yes. So, as I said, I start with the greetings to all of you, and very eloquent lecture and a demonstration by the two previous panelists gave us a good idea. One about the financial service industry, and the other about the manufacturing and distribution industry. Now, GST. I will start with the slide of GST, the goods and service tax. But then, as you know, the GST has been rechristened by our Honorable Prime Minister as a good and simple tax. And therefore, the aim of everybody, whether it is in industry, whether it is service or manufacturing, or whether it is a bureaucracy, I think the thing is, the slide is now shared. Okay, now is to work towards making this good and simple tax as envisioned by our Honorable Prime Minister. Of course, there will always be hiccups because this is a new baby, and as we know, in the case of a human baby, we say that till the baby attains 5 years, you will always have problems in dealing with it. Therefore, we are only entering the completion of the 3rd year of the implementation and the start of the GST regime. So, as far as the contracting industry is concerned, and we are into interior fit-out contracting, the name Saundarya, as most of you would know in Sanskrit, is beauty. Now, the word is not used in its own characteristic. It's always used along with Saundarya Lakshanam. And what is the meaning of Saundarya Lakshanam? It is a divine beauty and grace. So, what we do is we enter the building after the brick and mortar is set up. And what we do inside reflects the outside of the building. As it is often said, right, that the face is the index of the mind. And therefore, what we do, the inside of the building is always reflected on the outside as an edifice. Okay. So, having described Saundarya in terms of what it does, let me get on to the next part. So, this is what the previous panelist, Mr. K. Suresh, addressed, deserved of, set off between, there's an IS added, should be IGST, CGST and SGST. There is a slight variation here. The IGST is adjustable between CGST and SGST and vice versa. But there is no interoperability between CGST and SGST. This is an anomaly that needs to be set right by the government, and being a one nation, one tax, there should be a set off between each of this irrespective of whatever. Because that creates a certain kind of a working capital constraint. And although we might talk about, a one nation, one tax, we as, an interior fit-out contractor need to set up certain project offices in various places where we are contracting. And therefore, the question of planning the purchase in terms of availing the 100% input tax credit, whether it comes to a local purchase or whether it comes to an interstate purchase, needs to be thought out well in advance. In our kind of an industry, the orders are distinguished between a factory supply, between a WCS, between a local supply and installation. Not possible for us to be 100% accurate in terms of planning or purchases. But if this IGST, CGST and SGST interoperability is available, then it definitely helps. So I agree with my previous panelist, Mr. K. Suresh, that the government should make it simple and make this inter-adjustability at the very earliest. In fact, In the beginning, I wanted to say that the timing of this seminar, this webinar, is quite significant because, as you know, in another 15 days, the GST Council is going to meet. Added to that, we have also read a few days ago that the government is likely to come with another stimulus. If the GST Council and the timing of the stimulus are integrated and the thoughts and views expressed by the panelists here are carried by the eminent IDTC wing of the ICAI to the government, I'm sure that things will work. So, let's get on to the next slide, which is the input credit, the availment of input credit. Mr. Batra spoke about the availment of input credit. Initially, due to the hiccups in the system, though the matching of the sales and the purchase invoice was intended, the system had its own limitations, and it was announced that the input credit could be availed irrespective of matching. That was the situation till about 5 months ago. In the month of between, I think, November and January, the government brought in a restriction to say that the input credit can be availed only when you match, and if not matched, for the unmatched portion, you can avail up to 10%. This was, I think, primarily done because the government's GST collection was not up to the expectation, and also the input credit going out of line due to the mismatch was also affecting the government's internal revenue of the IGST. It's also notable at this stage to point out that due to the hasty implementation of the GST, the CAG came out with a report last year that the government has lost almost about 48,500 crore in terms of its GST revenue. Now, you have got this input credit now, which you can avail to the extent of 10% or 20%. But during this COVID period, the Honorable Finance Minister announced that during this COVID period and up to September 30, you can avail of the input credit as per the earlier system, whether you have matched it or you have not matched it. However, it is the request in particular of the contracting industry because of its intrinsic cash flow issues. At the same time, I don't want to be selfish. It should be made available to all industries as well, that the availment of input credit, irrespective of the matching formula, should be extended up to March 2021. This is a request that the IDTC committee put forward to the government. And probably in its second stimulus, the government may hear the ICAI IDTC to extend this availment up to March 30, 2021. Then we go to the next slide. The reverse charge for subcontractor GST. This is an extremely important subject. In fact, I took up this subject with the Institute even during the service tax regime. I said that there should be a reverse charge on the subcontractor billing because today the migrant worker is on everybody's lips, irrespective of whether you are connected to the industry or whether you are not. I'm saying that more than a migrant worker, the primary contractor is a migrant, himself or herself. It's only the employer who is fixed in one place. Now, these migrant contractors who are the primary employers of these migrant workers are sitting in one place. And they do not effectively and in a timely way file their GST returns, which is affecting the main supplier of services, who is the principal employer, unable to claim the input credit under the new regime. Instead of that, if the government could look at reverse charge under the labor contract up to a certain value, then one, it benefits the government more in terms of revenue, but revenue is going to be offset by the input credits, and therefore it is not an effective result of the revenue. However, in terms of GDP calculation, I can say that this input of the subcontractor activity does not get recorded, and therefore this does not go to incrementalize the country's GDP calculation. So from that standpoint, it is quite important for the reverse charge to be implemented ASAP, at least up to a certain value. It also adds to the ease of doing business as far as the principal employers are concerned. Now I would like to go to the next slide. Now, this is an important and an enabling provision given under the GST rules. It has improved the ease of doing business for the contracting companies, where your dispatches are permitted in CKD SKD form under Rule 55 of the CGST Act. What does it mean? For me, supposing I have a contract to supply X quantity of doors to a realty developer. Now, it is not just the door. Soundarya's activity comprises of the door, the frame, right? And the way we do the frame is ready fixed at the site. There is no question of chipping and chopping at the site to adjust the size of the frame to the building, because as you know, today construction, although greatly developed, still you will find if you go to any apartment and if you measure the dimension of the main door in the, let's say, 3 apartments that are in one floor, you will find that the measurement does vary. So if I am going to dispatch all these components of the door, then I have to wait till I complete in order to do that. However, under this CKD SKD form, I dispatch the different components of the door and then finally dispatch the door, because it helps the installation of the door frame and its archive tray, and then the door goes into the site when it's actually required and the door is assembled. So it's a very important and enabling provision. However, there is a big negative as far as this is concerned. When I dispatch in CKD or SKD form, I am supposed to invoice for the total value of that particular contract. And then I have to declare it in my GST return and pay the GST. As far as dispatches are concerned, I dispatch it along with my eBay bill and the DC with a copy of the invoice. The final original invoice goes to the buyer only when the final dispatch quantity is made. So the buyer, who is a very large company in many cases as compared to the contractor, capitalizes this only at the end and pays the GST only after many months that the contractor has declared this sale and then has paid the GST, which is definitely a strain on the contractor, because the cash flow of the contractor is always under strain. It's not only because of COVID, but even prior to COVID. So the solution to this would be, see, the WCS contract affords the luxury to the contractor of dispatching the materials on GST and invoicing at the end of the final supply. Now, if the facility of WCS contract billing is extended to the CKD SKD form, it will greatly benefit the contractors as well as the buyer, because the buyer is receiving the material and can install the material in its component form and wait for the end product to come. Because the buyer also, when the end product comes very much in advance, the question of storing And the question of damage to the end product is always there in a site. So the door goes at the last stage when it gets installed. So therefore, the buyer is also benefited and the contractor is also benefited if the WCS portion, a portion of the WCS contract is extended to the CKD, SKD billing. And, I think the ICAI, IDTC would do us a great favor by taking it up with the government. Can we go to the next slide, please? Okay. Here is the question raised on the SEZ project. And the reason I said I would like to wait is, now, SEZ projects as well as the export sales. Now, under the SEZ project or the export sales, you have two options. One is a zero rated option. The other is to invoice and claim the credit. Under the zero rated option, you do not have the option of claiming the input credit to a certain extent. But here, when you go with an LUT, it is a letter of undertaking, which is to be renewed every year. You submit a letter of undertaking to the necessary authorities and you can bill for this SEZ project under the zero rated sale, where you are not liable to charge, collect and pay the GST. Similarly with the export sales as well. But in the LUT system, you have to renew this LUT every year. It expires March 31 and you have to apply for the renewal and get it for the next financial year in advance. The government can consider the LUT for SEZ project till the life of the project. As far as export sales are concerned, we do understand that the volume of sales, which will differ from year to year, and the LUT carries a value clause to it. It is not possible to give as a blanket LUT. However, for SEZ projects, the government can approve a blanket LUT for the value of the project because that is fixed in value. The upper limit is more or less fixed in value, and the contracting company need not apply every year as far as this LUT is concerned. Can we go to the next slide, please? Yes. So, these are the peculiar and intrinsic situations that we face as far as the contracting industry is concerned. And yes, definitely GST has been a plus point. There are hiccups, but I think there has been net positive as far as GST is concerned, whether it was service industry or the manufacturing industry.
Okay, sir, presentation is over. Okay, sir, question answer.
Question answer.
Yes, sir. Yeah, you can. Do you have those questions with you, sir? Suresh Dasmati, sir?
1 minute. Question link.
Or I can also, in fact, spell out those questions which have received. There are numerous questions, in fact, sir.
Sir, unmute, sir. RK sir, mute ho gaya.
Yes, sir. Sorry. In fact, there are numerous questions. In fact, what I would do is I would summarize these questions one by one. Because there are questions which a member has asked, a huge big question, and which I don't think it will take almost an hour for you to answer.
No, I would make a suggestion. If the questions are brief and requires a brief answer, it's fine. But if the questions are large, definitely I would like to address them. And if they can be emailed to me, as and then I can definitely address the answers to the ICAI IDTC, who in turn can relay the answers to the concerned questioner.
Thank you very much. Thank you. Thank you. In fact, I would take up one question from Delhi. In fact, today we have participants across the country, and also there's one participant from Bahrain who is also with us on this webinar. Well, the question is, ITC on construction services guide us how to interpret on his own account words used in 17 subsection 5 of the CGST Act. Goods or services or both received by a taxable person for construction of an immovable property on his own account. This is the question of one of the participants from Delhi, sir. Would you like to take this? On his own account.
And what is the doubt of the questioner?
In fact, let me take this, sir. In fact, on his own account here will mean that the person, for example, I'm a builder and I'm constructing an office for my own use. So there I'm buying materials on my own account for my purposes, my self-use. That is what is the interpretation that is being drawn here, sir. So I have answered the question. Sir, here one question from Dr. Shanbakavalli is that in services sector, the place of supply will be considered as receiver's point or the giver's point. Place of supply.
When it is a manufactured good, which is proceeding from the manufacturing point to the receiver of the goods, there the place of supply is the manufacturing entity. Now, where the goods are received at the receiver's place and then the goods are installed at the receiver's place, then the place of supply becomes the receiver's point.
In fact, there are many questions unrelated to the subject people have asked here today. We are not taking up those questions, esteemed friends. Unrelated to the subject, certain of you have asked doubts on GSTR 1 return, GSTR 3B. I'm sorry, we are not taking those questions today, friends. There is a suggestion received from Mr. Agarwal from Mumbai that government should allow service providers to pay GST on receipt of actual payments and not on billing basis. In fact, please, we will certainly take it up at the appropriate time. There are also many suggestions which have been received from many members. In fact, if you have asked questions, it's easier for us because there are hundreds of members who have written to us, and questions would certainly be of help. Sir, the one specific question from Anil Kumar Grover from Delhi. In the interior contract, if the supply of the capital goods like LED TV, CCTV, air conditioning plant, will the ITC be available for the contractor and the client? That is, it is an ITC doubt on the supply of capital goods in an interior contract, sir. Will you take it, sir? The question.
No, this capital goods, distinguish the capital goods between the fixed capital goods and the movable capital goods. Now, if the capital goods, there are ways in which the capital goods are contracted by the builder. One can be under a EPCG contract and the other under a non-EPCG contract. Now, as far as the EPCG contract is concerned, where the builder is planning to import some of the capital goods, but alternatively getting that developed internally, then the value of the customs duty, which is calculated by the DGFT, is given by way of an EPCG license and an invalidation letter to the contracting company. Based on the invalidation letter given to the contracting company invoices the builder with the IGST, CGST or SGST, shows that as a deduction in the invoice, which means that the developer, the builder, is not bearing the GST part of that value. the contracting company is entitled to claim refund of this IGST or CGST or SGST paid based on invalidation letter. In fact, there is a very clear example. You see, the government, when they brought in this particular provision of either the receiver of goods or the seller of goods claiming the refund, they did not enable that provision in the application for refund. Personally, I have walked the corridors of the GST Commissioner, the then GST Commissioner, Mr. Upendra's office. I brought out the anomaly of this to the GST Commissioner, and then in about 6 months' time, this anomaly was removed, and the GST refund application form was modified for us to claim that refund. And we have got almost, Mr. But the non-receipt of refund claims for a long time. But I can tell you, my experience in claiming the refunds has been very different. Over the last 16 months, we have got refunds of almost about 6 crore fairly quickly. So, one part of the question is, yes, you need not pay the GST if you have an EPCG contract with you. If you do not have an EPCG contract and all this, the television, the movable assets as well as the immovable assets become a part of the contract, then you are capitalizing the entire value of the contract as far as your books are concerned. And as far as capital purchases are concerned, we know that a builder, a developer, a hospitality owner who's developing can claim the input credit on both the movable and the immovable assets capitalized in the books of the developer.
Thank you for clarifying that, sir. In fact, the issues with respect to ITC and which are connected with the construction and works contract are manifold. So, in the numerous questions that we have here, one of the participants is trying to seek an answer from you as to what are those safeguards that you take up before you venture into a project to ensure that ITC is utilized to the maximum extent possible. That's really a wonderful question. Can you please enlighten us, sir?
This is something that, I don't think in a webinar I can address it because there are several issues. As I said, definitely if that particular question along with others are sent to me by mail, I will address and I will detail out the steps to be taken by the developer, the contractor or the main developer so that they can definitely follow these steps. I cannot say that through these steps you can do it 100%, but you can definitely minimize the loss of input credit. To that extent, I can answer.
So, but sir, will it be right to say that each and every project as far as construction and works contract is independent and can be looked at separately when it comes to utilization, when it comes to taking of the ITC? Absolutely.
Every project is intrinsic to itself because the way the developers plan the project itself is different. Just like, the dimensions of the doors are different from one flat to another, the way the developers plan this itself is very different in terms of their purchases, right? And in terms of their procurement and in terms of the labor contracting. And therefore, each one needs to be addressed very differently.
Thank you, sir. In fact,
there's one important point, Mr. Rajendra Kumar. One important point.
Please.
Interest on delayed payment of GST. I found that one of the publications that you released delved on the subject of interest and penalty. Today,
yes,
interest vis-a-vis the old regime of VAT and service tax, where you paid interest on net payable, the GST regime, has not taken care of it. You pay on gross liability. This matter I took up sometime in November, December with the Joint Commissioner GST, and they assured that yes, this is an oversight, it was overlooked, but after the elections and the formation of the new government, they are definitely going to rectify this particular anomaly, which has still not been done. Third, this is an extremely important aspect, especially during this period of great difficulty that industry and services are going to face over the next couple of years. Interest payable on delayed payment of GST should be on net credit and not on gross payable. Even though you may be paying lower interest during the COVID period, it should still be on the net payable and not on the gross amount.
Thank you, Suresh sir. In fact, to all those 3,000 participants who are there online, I would like to inform you that along with many others, ICAI was also continuously representing to the government that this provision needs an amendment. And on March 13th or so, when the GST Council was meeting, we also met almost all the representatives of the GST Council and also the regulators. And submitted a representation, post which they did make a mention in the GST Council that Section 50 will be amended with retrospective effect. In fact, that amendment has still not received the legislative support that is required. But then let me tell you, friends, please inform all your clients. Please inform all of you, your professionals, and tell your clients to please pay interest on net basis. Interest on net basis. In fact, about 7,500 crores of net interest liability is also still not paid to the government. That was what informed to us in March. So kindly tell your clients to pay on net. Forget about gross, but at least pay on net. And yes, Suresh sir is right that we will certainly come out of it very soon. Now to one question to both of you, to Suresh Dasarathi sir, Suresh from the India Cements Capital. In fact, Batraji had to leave because he had another assignment by 1 o'clock. To both of you, one question. The 180 days provision which is there in the Act, that is payment to be made to the supplier within 180 days. And if the payment is not made within 180 days, the ITC has to be reversed on the 181st day and interest has to be paid. Let us hear the views of K. Suresh first. Suresh sir, India Cements, for you this question.
Yeah, this is actually against the what is called business sense, if you ask me frankly, because the payment depends upon various factors, the availability of funds, everything. See, I am claiming that ITC based on that bill, correct. When I am not able to pay means you are penalizing. See, both are different issues. Payment is a different issue. Consider for my input is a different issue. I mean, you should not mix up both the things. One is based on my working capital ability, another is what I am doing genuinely. Genuinely, I have consumed that. Genuinely, I have taken that as an input, and I am claiming that input tax. But you are not allowing because I have not paid the bill. See, I mean, this is not actually correct. It is incorrect. No, maybe government may think that if I don't put that provision, then there may be some illegal billings, overall shooting of billings may not be actually paid also. See, other side also we have to think. So there must be some mechanism of ensuring genuineness of the bills, but at the same time payment can be delayed. The payment, particularly is now COVID situation, definitely all payments will be delayed. No company will be in a position to pay within 6 months. So when that's the situation, naturally we have to think of some exemption for the time being, number one. Number two, for long term, we have to ask the GST Council to make some amendments on this. Unless it is a genuine bill, if it is proved genuine bill, you can ask the company to claim the ITC. I am telling you.
Thank you, Suresh.
Yeah.
I agree with K. Suresh. I agree with K. Suresh. This is a draconian measure because apart from the issue that Mr. K. Suresh pointed out in terms of the cash flow, whether it was the past or whether it's going to be the future, the next 2 years is going to be a heavy drag on the finances of all companies, big, small, whatever you take. At the same time, when you're talking about this measure, if you go to the direct taxes and you go to an income tax assessment, the officer is seeing the movement of your creditors, suppliers as well as in terms of, the service givers. The question of whether it is genuine or not is coming out in that particular assessment, because if your movement of sundry creditors drags on and the aging of sundry creditors is shown for more than 2 years, 3 years, the expense is directly disallowed under the income tax. So, there is a question of, wondering whether it's genuine or not. I'm either paying a penalty there or here. Now I'm paying a penalty on both.
Sorry, then, both of you, then one question to both of you. Will you be happy that whether point number one, 180 days provision to be removed in totality, yes or no?
Yes.
Yes. Yes.
Okay. Second question.
But it was not there under the old regime. It was not there under the old regime.
Yeah, one moment. If the government says, no, I don't want to remove 180 days, but I will not charge you interest on the 181st day when you reverse, will you take it?
Then you allow me to claim the entire expenditure under the direct taxes.
Suresh sir, Suresh sir.
No, actually, see, interest is not the question here. The question is, genuinely I consumed the bill in my operations. Okay. Only problem is I have not paid the payment. I mean,
so you are trying to say that it should be a laissez-faire policy of the government.
Exactly.
Am I right?
Exactly.
And the spirit of no double taxation.
Absolutely. Thank you very much. Thank you. That was really wonderful. And sir, Suresh sir, you are from the construction industry. Suresh Dasarathi sir, you are from the construction industry. How do you look at section 9(4), which has been specifically targeted to your industry? Construction, with respect to unregistered purchases, there are questions which members have asked. How do you deal with because your industry is known for unregistered purchases? I don't want to go into the background and why and ifs and buts, etc. But how do you deal with it? How do you deal with the nebulous section 9, subsection 4 of the CGST Act?
Mr. Rajendra Kumar, though I am part of the construction industry, I am not directly on the brick and mortar side. And therefore, this particular section 9(4) is more on the brick and mortar part of the construction rather than on my industry where I enter the building after the brick and mortar is set up. So, I am not the competent authority to address this section 9(4) anomaly.
No one wants to, in fact, touch this 9(4) and
I know. I've heard about it.
They want to stay away from the answering this because there are certain issues. There is one question which Sanjeev from Indore has asked. I'll take it up. He says, sir, our company is in construction company. We are registered in Gujarat. It is getting contract for construction of roads, canals, bridges in different states in India. Are we supposed to take registration in all the states?
Yes.
Can you
yes, you have to. Yes, you have to. Because, you see, if you take the GST, whether you call it GST or whether you call it a simple tax, whichever way you call it, GST is a transaction tax. It is a transaction tax.
Yes.
So, you are doing a transaction in different states. This affects Mr. K. Suresh, where they have to get a registration on various cities, various districts where they have offices. It is the same with the construction industry, where you are doing roads, bridges in different states. You have to take a registration under that. That's why I said, when you do construction, when you do interior fit out contracting or main construction in different states, you have to establish and get a GST registration in the various places, and therefore my planning of purchases itself has to be so comprehensive in order to minimize the loss of my input credit.
Wonderful, sir. Very well answered. Very well answered, sir. Very well answered. Yes. K. Suresh, sir, how do you deal with the GST on penal interest, late fees, penalties that the financial services industry collects? As you know, interest on loans alone is exempted as
Exempted,
far as the
yeah.
GST is concerned.
You're right.
There is an interest on the delayed payment. There is a late fee that you collect. There is a penalty you collect. There are document charges that you collect. There are maybe consultancy fees that you collect. There are various other charges you collect. How do you deal with it, sir? How do you convince your the customers when they come to you? Please, can you explain?
Yeah, actually, as I said, the cost of service goes up, even though it is indirectly related to money only. See, the offshoot of any delayed payment is what? Because of non-payment of his dues. So ultimately, it is related to money only. But government feels that we should generate revenue from such additional income generated by the finance companies. Actually, it is, in my view, they are all not that much big incomes. If you ask me frankly, the composition of income of any company, the majority is normal interest only. The penal interest or the additional interest or, document charges, these are all very petty amounts only if you compare the overall income. So government, can think of something else against that. In the sense, they can exempt those things also. For example, even in broking also, if I do a delayed collection from the client, suppose he has to pay as per the stipulation T+5 years to pay. If he's not paying, I am charging something, then I have to pay interest on that. These are all, additional burden to the clients only. And we have to convince, the client. Yeah.
In fact, sir, there is one more school of thought. It is documented that the banks and the various kinds of your type of financial institutions which are large, which have establishment in almost all the states in India, they incur huge GST input on rent, on so many other inputs.
Yes.
So it's documented, and there have been appeals made to the government that why don't you bring interest on loans also within the purview of GST? Your take on this case, Suresh, sir?
Interest on loan on GST. No, I'm not able to get your question. Huh?
Interest. The interest on loans is currently exempted from GST. There's no GST on interest on loans.
Yes.
There have been representations made by financial institutions and banks. Please levy interest, GST on interest also, so that we can take input tax credit on every component that on rent, on other expenditures.
But practically, in my view, actually, the quantum of input what you are going to get by way of rent, telephone, etc. may not be that much phenomenal comparing to the GST which you are going to pay on the interest. I am telling you frankly. I don't know why this representation is made. It's going to become another liability for them. In fact, working capital.
This is not made by us. It was made by Indian Banks Association maybe 2 years back or so. I did read that.
Because banks banks, I don't know. See, ultimately banks, what they would have thought, this input they can pay, against the payout of loans interest, GST. Anyhow, they will collect the GST from the customer only, See, for them it's not going to be out of pocket actually. They will collect from the customer and they can make use of this ITC. Instead of that, ITC can be lifetime, you can adjust, See, there's no time limit if I remember. There's no time limit to adjust the ITC. Am I correct? So, you can keep it as a deposit in your account and you can adjust its future liability of any tax comes. And just for the sake of adjusting ITC, you want some other additional tax on interest, you want to levy GST, I think it's illogical. In my opinion, it's not correct actually. It's not correct.
Thank you, sir. Thank you very much, sir. Sir, any view from you, Suresh Dasarathi, sir, on this?
Nothing in particular. I think we had a very comprehensive discussion, and I think we have a very comprehensive opinion given by the two panelists. And I think the institute and the IDDC committee, I think, is doing human service. Actually, Mr. Rajendra Kumar, your service that you are rendering to the industry and service, not only to the professionals of the CA professionals, I think that is not advertised. But you are rendering human service. From what we've heard in this webinar, you're doing human service that I think has gone unrecognized, and I think the institute like the Honorable Prime Minister addressed a letter to all citizens, I think you should address a letter to all the professionals and the industry, the kind of human service that the IDDC committee is rendering for this indirect taxes, not only the implementation, but also, the rectification, making it smooth and making it into a good, simple tax like envisioned by our Honorable Prime Minister.
Thank you, sir. We are honored, in fact, by your words. And in fact, I should certainly tell you here that we have a great team of staff in the institute who help us in this process. The committee secretariat is very, very adequately empowered, and we have powerful people manning the secretariat who, in fact, help us in all these operations. A moment when I would like to mention the names of all our publications, and I would like to certainly come on record those authors who have in fact published or written the books for the institute. Institute as a publisher is deeply indebted to all the authors who have in fact written the publications for the ICAI. Give me a moment. I don't want to miss out on any of the authors who have written this to all of us. In fact, the Honorable President did release that today to all of us, and as you will see, we started today by 11 o'clock and 11 publications were released. A moment, please, to all of you. Yeah. In fact, yeah, here it is. We have here now. We have books written by the handbook on the handbook on late fee, interest and penalties, which was authored by Rajesh G. Saluja, who is from Delhi, and we have this handbook on advance ruling, which was authored by our very, very esteemed and good friend C.A. Navya Malhotra from Delhi. In fact, all these books are also vetted by various chartered accountants across the country. The advance ruling was vetted by C.A. Manish Gadia, Viral Khandar, and Shravan from Chennai. And we have a handbook on annual return under GST, which was written by Sheikh Abdul Samad, and it was in fact vetted by C.A. V. Shankar Narayanan from Chennai. We have this handbook on casual taxable person, which was in fact written by I'll just make a mention of that now. The author's name here, Yash Dadda, who wrote this book, and it was vetted by Sheikh Abdul Samad Ahmed. And we have a handbook on e-way bill. E-way bill is a very, very simple concept, but it is almost confused at every point of time. We had C.A. J. Murali and C.A. Ganesh Prabhu, in fact, who wrote this handbook for all of us. And it was in fact vetted by esteemed Sheikh Abdul Samad Ahmed that vetted that handbook. And we also had one more chartered accountant who vetted this handbook on e-way bill, and that was none other than Shubham Khaitan from Kolkata, who did this vetting. The handbook on job work was in fact written by C.A. V. Shankar Narayanan, and it was vetted by Hitesh Jain of Hyderabad. And then we had this handbook on reverse charge mechanism. Again, reverse charge has been a very, very important concept in GST worldwide, internationally. It was in fact written by Pramod Dayal Roongta from Kolkata, and it was vetted by Saurabh Singhal on the RCM. registration by CA Sheikh Abdul Samad Ahmed and CA Viral M. Khandar, which was vetted by Vasudev K. Joshi from Chennai. There is a handbook on TDS. In fact, TDS, many of us relate to income tax, but there is TDS provision under GST. And this small booklet was written by CA Rajesh Gupta, and it was vetted by CA Ganesh Prabhu. And we also have a handbook on refunds under GST. Refunds again is a very, very big concept, a concept which is now time tested. And this book was written by CA Abhishek Agarwal from Kolkata and vetted by CA Sheikh Abdul Samad. And then finally, friends, we have this book on invoicing under GST, which was written by Ashuji Dalmia from New Delhi, and it was vetted by Balasubramaniam from Madurai and G. Saravana Kumar. Both of them are from Madurai, who vetted this book. So all these 11 publications are at your service from tomorrow, esteemed friends. And our panel, esteemed panel, can you just in one word, if you can tell me, or in one sentence, if you can tell me, if you are the finance minister, what will you do in the GST? K. Suresh sir, you first.
Yeah, first I will moderate the rate, which are very high in many cases. So I have to bring to the medium point and make it more happy for the people. I will do that.
Suresh Dasrati sir.
I lost your question somewhere in between because there was a disturbance.
Sir, if you are the finance minister, what is that one aspect you will look into GST?
The one aspect that I look into GST is in terms of the input credit and the refunds.
Thank you, sir. That was wonderful. Both of you giving wonderful answers. Suresh talking about rationalization of rates, and you are talking about input tax credit and refunds. All the three are the pillars on which the GST is standing as on date. So, in fact, the time has come for us to express our sincere gratitude to each and every one of you.
We have to thank you, sir. We have to thank you, sir, for giving us this opportunity.
In fact, K. Suresh sir, Suresh Dasrati sir, and in absentia, Sandeep Batraji deserve our sincere thanks, our deep sense of gratitude for sparing your valuable Sunday for the Institute, for the cause of the members, and especially for this committee. All the authors of the publication who have spent their valuable time and treasure, all those, the chartered accountants who have vetted these publications, and especially our GST and Indirect Taxes Committee staff in the Institute, Sharad, Ajay, Ratika, and then we have Impreet Kaur and Puran, all these 5 staff of the ICAI who are in fact 24/7, 365 days working for the committee. A great sense of motivation for all of us in the committee that so many of you, our viewers, numbering more than 3,500 plus, have logged in today and watching this grand discussion that took place just now in front of you. A sincere thanks to all of you. Please stay safe, stay fine, stay healthy, and always be confident and motivated. Thank you very much. And until we meet again for the next webcast, for the next seminar. Thank you very much. Jai Hind.
Thank you.
We thank you for the opportunity to share knowledge, because it is said that knowledge and wealth needs to be shared if they have the growth. And today was a great opportunity, plus all those invisible attendees, right? I would like to place my thanks on record for being patient to hear us rambling along and sharing our knowledge, limited or whatever, with them. Definitely, I would like to receive all the questions by mail, and I would like to address each one of those questions to the IDTC so that they can share it with the attendees.
We will send it to you, sir. We'll send it to you. Thank you very much. Thank you very much. Thank you very much.
Namaste.